A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbarago. It's Thursday, the 16th of October. Thank you for joining us at this time on the show.
All right, let's tee off with your news now. The International Monetary Fund today held a press briefing on Sub-Saharan Africa's latest regional economic outlook. African Department Director Abebe Emerald Selassie will present new forecast analysis and policy recommendations, examining how the region is navigating global uncertainty and a shifting economic landscape. Let's listen in.
Sub-Saharan Africa's economic growth, we now estimate, is expected to hold steady at 4.1% this year, with a modest pickup expected in 2026. And in our view, this reflects ongoing progress in macroeconomic stabilization and reform efforts across the major economies in the region. Important to note that several countries in the region, Benin, Cote d'Ivoire, Ethiopia, Rwanda, Uganda, are among the fastest growing economies in the world. However, we still have quite a few resource-intensive countries and conflict-infected countries continuing to face significant challenges with only modest gains in per capita incomes. The external environment remains challenging, global growth is slowing, and commodity prices are diverging. Notably, oil prices are declining while the price of copper, coffee, and gold are fairly elevated. And external financing conditions have improved somewhat, allowing a few countries, Kenya and Angola most recently, to access international capital markets. The global trade and policy landscape has also deteriorated. Tariffs on exports to the United States have increased, and preferential access under AGOA has expired, while the direct exposure of most countries to the U.S. is limited. Broader trade policy uncertainty is weighing on growth. The projected sharp decline in foreign aid also leaves some lower income and fragile countries particularly exposed. Affected governments have sought to reallocate budgetary resources, but with limited fiscal space, they have limited room for maneuver. Notwithstanding these challenges, it's been really good to see the region showing strong resilience. But this will continue to be tested in the coming months. Pressure points include rising debt service costs, which are crowding out development spending, a shift towards domestic financing that has deepened the sovereign bank nexus, inflation that has eased at the regional level but remains in double digits in quite a few countries in the region, and external buffers that are under pressure and need to be rebuilt.
On the sidelines of the IMF World Bank annual meetings in Washington, D.C., Morocco's Minister of Economy and Finance, Nadia Fettah Alaoui, joins a fireside chat hosted by the Stimson Center's North Africa program. She says Morocco's long-term vision and openness to global partnerships have been key to its economic resilience as the country advances trade integration and sustainable growth. Let's take a listen.
I think the last 4 years at least were very interesting in terms of headwinds, of multiple crises, and of course Morocco had to manage the spillover of the crisis. But I think one lesson and maybe one recipe that we firmly believe was part of this dynamism and allowed for the recovery of our economy is that we have a long-term vision when it comes to partnerships, to integration in the global value chains. So we definitely are not changing our DNA or telling that trading with the world is not a necessity, is an axiom today, that there is, I would say, when you have, I would say, a good communication, respect, you can have opportunities. So I think this, we are really blessed, and thanks to the leadership of His Majesty, to have this long-term vision, which means that We've been having 50 trade agreements with the world, which is quite an exception, I would say, in the African continent. So we need to be, I would say, very careful in analyzing what's happening. But none of our decision is short-term. When we say that we are open, we want industry, we need to trade, we need ports, it's really for the long term. It doesn't mean that from time to time one market gets narrow, another one might open, and we have competitors coming from all over the world, but we need to keep the pace and the reforms and the openness of Morocco.
Still at the World Bank IMF annual meetings, the governor of the Bank of Ghana reflects on the country's macroeconomic journey, from external shocks and fiscal vulnerabilities to the implementation of reforms under the IMF-supported program. He outlined how Ghana is working to restore stability, rebuild confidence, and lay the foundation for a private sector-led recovery. Let's take a listen.
When we came in, we saw that we had to do a number of things. Even the entire monetary policy framework needed to be upgraded. We needed to strengthen the credibility of the central bank. There was a lot of liquidity, that had built up, and so we needed to do lots of sterilization. We also needed the complementary, efforts from the fiscal authorities, and so we had to engage the fiscal authorities at the same time. And then you also needed to look at food prices. So it was a complementary effort across all fronts that has helped to, deliver the disinflation we are looking at. But we give a lot of credit to the tight monetary policy stance we have preserved. Currently, even though we are easing, we are still holding that anchor very strong. Strong liquidity management, strong sterilization. For that, we will not compromise, even as we ease downward.
Maintaining such a monetary policy stance cannot have been easy. Huh? I'm sure questions must have been raised.
Very much so. The cost to the central bank's balance sheet has been immense. To give you an idea, almost stock currently is around 85 billion Ghana cedis. And out of that, the sterilization we have done this year alone accounts for about 65 billion. And so, yes, but there's a price to stabilization. There's a cost to stabilization. We are in discussions with the fiscal authorities for them to assist us, probably to pick up part of that cost. But as they always say, stability is a public good. When there's macroeconomic stability, there's a cost to it. Someone needs to pay for it.
In Uganda, the Uganda Securities Exchange today hosted the East Africa Capital Markets Conference, focusing on how digital transformation and sustainable finance are shaping the region's capital markets. Technology is revolutionizing how investors access and engage with markets, while sustainable finance is driving capital towards inclusive long-term growth. From innovative trading platforms to green investment initiatives, East Africa is at the forefront of a new era in market development. Let's hear more.
Looking at our theme, and specifically digital transformation and inclusive access. Technology is transforming how capital markets operate across the region, making investment more inclusive and accessible ever than before. In Kenya, the Nairobi Securities Exchange mobile app provides investors with real-time market data, company performance tracking, and trading capabilities that empower investors anywhere, anytime. Rwanda's stock market live app enhances market transparency and investor engagement through real-time data. In Uganda, the USC Easy portal is bringing the capital markets directly to the palm of every citizen's hand. Through mobile phones and even USSD technology, investors can buy and sell shares from virtually anywhere, removing barriers of distance and complexity. The exchange fully automated from the open outcry trading to the automated trading systems, bringing greater transparency, speed, and accuracy. Today, we have gone even further with the USC Easy portal and USSD platforms. Investors are able to participate in all, have got quite a number of features, which include getting their statements, their last transactions, they're able to input their KYC, and it takes less than a minute to open an account using this technology.
In other news, the DHL Group has announced a 300 million euros investment plan for sub-Saharan Africa to expand infrastructure and boost trade connectivity across the region. The multi-year initiative will strengthen DHL Express, global forwarding, and supply chain operations, targeting growth in e-commerce, energy, perishables, and healthcare. The move reaffirms DHL's long-term commitment to Africa amid rising regional integration under the African Continental Free Trade Area. Finally, on News Now, the Central Bank of Libya has signed a cooperation agreement with the World Bank Treasury under the Reserve Advisory and Management Partnership Program. Signed in Washington by CBL Governor Naji Issa and World Bank Vice President Jorge Familia, the deal aims to strengthen Libya's reserve management, boost returns, and build technical capacity. The governor also held talks with IMF officials on structural economic reforms and outcomes of Article 4 consultations. I am Melissa Enoch, and that's it on News Now for this Thursday. The show returns shortly with Grace at the archives room for our markets round. Stick around. Welcome back to Money Moves. Let's now go over to Grace for today's markets updates. Hello there, Grace. What are the markets like today?
Thank you, Melissa. Now let's track today's trading day, starting off with the equities. It's a mixed trading day across the African equities. The Nairobi Securities Exchange climbed 2.41% to 176.39. Africa's biggest exchange, the Johannesburg Stock Exchange, rose 0.58%. The Zimbabwe Stock Exchange fell 1.39%, while the EGX 30 added 0.06%. In West Africa, the BROVM declined 0.47% to 335.97. And here in Nigeria, the NGX All-Share Index edged up 0.41%. Let's do a quick round on some of the Pan-African currencies. The Naira weakened 0.45% to 1,470 Naira 20 kobo per dollar, while the Rand edged up 0.18% to 17.32. The CFA franc was steady at 563.09, and the Egyptian pound firmed 0.25%. The Kenyan shilling was little changed at 129.21, and the Moroccan dirham strengthened 0.19% to 9.19. Let's switch into the commodities data deck, beginning with energy prices. Brent crude gained 0.45% to $62.19 a barrel, and US WTI added 0.48% to $58.55. Natural gas eased 0.30%, while Arabian gasoline was flat at $1.83 as at 13:37 GMT. And finally, two soft prices. Cocoa prices jumped 3.18% to $5,994 per ton, leading gains across the soft commodities markets. Coffee rose 0.38% to $396.40, and sugar added 1.08%. Cotton was nearly flat at $63.72, while palm oil declined 0.36% as at 13:40 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the FMDQ studios, we say thank you very much for watching and bye for now.